Imagine putting 80% of your crypto portfolio into a single coin. Sounds reckless, right? Unless you're Raoul Pal and you believe it's the best risk-reward opportunity of the entire cycle. Most investors spend years preaching diversification. Never put all your eggs in one basket. Spread your risk. Own a little bit of everything. But Raoul Pal has never been afraid to make concentrated bets when he believes the odds are overwhelmingly in his favor. Over the past year, Pal has repeatedly revealed that roughly 80% of his crypto portfolio is invested in Solana, making it by far his largest digital asset holding. That's a remarkable position, considering Pal has been one of Bitcoin's most vocal supporters for years. So why would one of crypto's most influential macro investors shift such a large percentage of his portfolio into a project often described as Ethereum's biggest competitor? Is he simply chasing higher returns, or is there a deeper macro thesis behind the move? Let's break it down. First, is it really 80%? Before going any further, it's worth clarifying something important. Raoul Pal has publicly stated on several occasions that around 80% of his crypto allocation is in Solana, although the exact percentage has varied over time as prices changed, and he occasionally rebalanced his holdings. This isn't necessarily 80% of his total net worth. It's approximately 80% of his cryptocurrency portfolio. That's still an enormous concentration by almost any investing standard. Most professional investors avoid putting such a large percentage into a single asset. Pal intentionally chose a different approach. Why move away from Bitcoin? This surprised many people. After all, Raoul Pal spent years arguing that Bitcoin was one of the greatest macro investments of our generation. That view hasn't really changed. He still speaks positively about Bitcoin. But Pal believes something important happens during every crypto bull market. Bitcoin usually leads the early phase. Institutional investors arrive first. Large amounts of capital enter the safest and most established digital asset. Eventually, as confidence grows, investors begin moving into higher risk assets, searching for larger returns. Historically, this has benefited Ethereum and, later, many alternative cryptocurrencies. Pal believes Solana may become one of the biggest beneficiaries of that rotation. Why Solana? At first glance, Solana looks like another smart contract blockchain competing with Ethereum, but Pal argues there's much more happening beneath the surface. Solana was designed to process transactions quickly while keeping costs extremely low. Developers can build decentralized applications. Users can trade digital assets. Gaming platforms, decentralized finance protocols, payment systems, and Neft projects all operate on the network. In other words, Solana isn't just another cryptocurrency, it's an ecosystem. Pal believes ecosystems with growing developer activity often attract users, capital, and eventually higher valuations. The network effect, one of the biggest reasons Pal likes Solana, is the network effect. Technology platforms become more valuable as more people use them. Think about social media. The first few users provide limited value. Millions of users create an entirely different experience. Blockchain ecosystems work similarly. More developers build applications. More applications attract users. More users attract businesses. Businesses attract additional investment. The cycle reinforces itself. Pal believes Solana has reached the point where these network effects could accelerate dramatically during the current crypto cycle. Why not Ethereum? This doesn't necessarily mean Pal believes Ethereum will fail. In fact, he has often praised Ethereum's importance. Instead, he sees investing differently. Imagine two companies. One is already enormous, the other is smaller but growing faster. Sometimes the smaller company offers greater upside simply because it has more room to expand. Pal believes Solana may offer a more attractive risk-reward profile at this stage of the market cycle. If blockchain adoption accelerates, he expects Solana's growth rate could exceed Ethereum's. That doesn't automatically make it a better technology, it simply changes the investment opportunity. Following the adoption curve one theme appears repeatedly throughout Raoul Pal's interviews. He studies adoption, not just prices. Adoption, every transformative technology follows a similar path. The internet, smartphones, cloud computing, artificial intelligence. Early adoption looks slow, then growth accelerates. Eventually, mass adoption occurs. Pal believes blockchain technology remains relatively early within that process. Projects gaining users during this stage could experience exponential growth over time. That's one reason he spends more time discussing user activity than short-term price movements. The macro connection Pal rarely invests based solely on technology. His macroeconomic framework plays an equally important role. He believes global liquidity is one of the strongest drivers of crypto performance. When central banks ease financial conditions, investors generally become more willing to own higher risk assets. That benefits cryptocurrencies. Within crypto, higher beta assets often outperform during strong bull markets. Pal believes Solana fits that description. If his broader liquidity thesis proves correct, he expects Solana to benefit disproportionately. Notice what's happening here. His investment isn't based on one factor. It's based on technology, adoption, liquidity, network effects, and market psychology, all pointing in the same direction. The risk of concentration, of course, putting 80% of your crypto portfolio into one asset carries obvious risks. Even excellent projects experience unexpected problems. Security vulnerabilities, regulatory changes, technical failures, competition, changing investor sentiment. A concentrated portfolio magnifies both gains and losses. If Solana performs exceptionally well, Pal could significantly outperform diversified investors. If it struggles, the impact on his portfolio would also be much greater. This isn't a strategy suitable for everyone. If you enjoyed this breakdown, like the video, subscribe to the channel, and drop a comment below telling us which investor's biggest conviction bet we should analyze next. Thanks for watching, and we'll see you in the next one.